Good afternoon and welcome to the end of day review for today. And today is Thursday, October 24, 2024 is the fourth training day of this week and will be the day before last day Friday. So we have a by the way, we are in week 43, which is the huge earning week. And also next week, 44, we have, the earning season. They have a Tesla earning yesterday, and today Tesla stock is up 20%. That's huge. I wonder if the Tesla is part of the XP future, S&P future. But anyway, we are week 43, and next week we're looking for the GDP data and then the PC data. So that is the economic calendar. All right, now go to the charts, right? This is the recording we have. So this morning when we see this, right, here's our thinking when we open, the charts, right? In the morning, we take things out at 8:26 right there. So basically right here we see the huge reversal, so it's just expansion right there, retracement, or expansion and retracement and huge expansion in the London, right? And right here it's gonna make you see the one rate right here, rate the London high, and right here it rate one more time, and then it boom. So it's a retracement right here. It's gonna retrace or it turn into reversal. It's gonna be a retracement or reversal. That's what we are seeing. And one thing we saw right here. So we saw on the daily, right, we take a screenshot at 8:32 right there. On the daily time frame, we see that it tested level, the 58.30 right there. 58.30. So it may go and test that level again, right? Because it tests from above, and then this is gonna be break the level. If it go and break the level, if it not breaking that level, then likely the next day, which is today, right? The end of the day for today is this is the end of the day. Yes, this is the end of the day right there. So it did test a level. You see that? We're gonna look at the 15-minute time frame how is play out, but it did test a level. You see that? Exactly, we anticipate. You see, this is before it's open at 9:30. We see this level at 58.30, and we see that the Wednesday it did test that level and it pulled back. So today surely it's gonna test that level, and that's exactly happened right there. So at the end of the day, you see that it tested a level, but it did not break it. So that means that tomorrow, Friday, it will not visit this level because it tried twice. So maybe the third time it will break it. Let's see. We have to watch them. This is how it's play out. Alright, so right here we have at the opening, we saw that we take advantage of this, and remember this setup. Remember when we have the London, expansion to the upside and take, you know, above the New York PM high, and then we see a double rate right here, buy side liquidity for London high, then go at, you're gonna see a short setup happen at 950. So we can take advantage of 915 and follow through. It will follow through the 930. So that's it, the setup. I think we did saw that before. Let's take a look at the screenshot. We have it. All right, we find it right here. Is in September 24, 25th. Okay, so but here you see this, the huge rally, right? But today it's not really a huge rally, but you see the pattern right there. Whenever it's rate the London high 1, 2, twice, so it's double rate buy side liquidity right there, then surely at 9:15 you see the sell up, go ahead and short them, because you see that right here, you can see that is the type 2 reversal right there. All right, the level you see a test below break and reverse. Yes, that's the setup we saw, and it did happen today. You see that rate 1, 2. As a matter of fact, you can see the setup right there. So it's not really a type 1 or type 2. All right, if you see right there, basically it tests from above a break and then it reverse, and this one's supposed to be what? Supposed to follow through, but it reverse. So it's a real breakout at this level at 58.64 right there. Right, that's let's see how it's play out right there. Yeah, you see, so if we aim for the high time frame right here, or at the London low, both hit right there, or at the open at 1800 hour right there, 18 hour. Yep. Just bar right there. So basically you see that if we follow up right here, we have a Ewing. We did took last trade, by the way. Let's take a look. Yeah, here's how we take advantage of this trade setup. It's not huge, I mean, it's not really clear, so we just see the momentum and take advantage of that. Because when we see the huge doji right there, and then it can break into either side of the candle. But you see that it hit the low and it's supposed, and then it go up, but it's supposed to follow through, but this one is reverse. Yeah, so we short right there. Yes, so we're going with short at 926, so before 930 right there, and we aim 2R, right? We're 2R, and we surprised. Sometimes market surprise you. It take out the 2R right away. Man, that's amazing. That's beautiful trade. You couldn't ask for much better trade than that. Just 8 minutes into the trade, your target, it got hit right there. See that? Boom, got hit. 8 minutes to the trade. So we try to understand right here what is what going on right here. So we have expansion right here, and then you have retracement. So look right here, where you see that reverse yesterday, and you see the expansion in London. The whole London section is expansion, and then you see the retracement. All right, and expansion. It tries expansion, and it fell right there. So expansion, one more, and then this one tried to expansion, but it fell because we didn't recall start recall 9:30, but you see at 8:30 it's huge. It's go up and then it flipped. Yeah. Then watch for the next candle. You see it down move, and then it fell to break to the upside. Then get ready to short them. That's what our interpretation right there. So basically expansion and go to retracement, and then it's try to make another expansion right here, and then boom right here. We can call it a reversal right here. It's a reverse. Then if the reverse right here, then right here it cannot reverse back, right? Because if the reverse right here, it take out the London, that can consider as a reverse right there. Yeah, with that in mind, then we can know for sure right here we're gonna short them because it cannot reverse from here. That means it's gonna make only one possibility, which is expansion, right? So you have a reverse right here, and then you have retracement. This will not reverse from here. It's not gonna go up here. Then it's gonna be next leg down. Yeah, that's the beauty right there. Yeah, so if we look at the scenario again on September 24, we can see the September 24 right there, 25th, excuse us. You can see the setup very similar, identical with the setup we have for today. Right, the setup we have for today is pretty much identical. Right, look at the charts we have. You see, almost identical. You see that? So basically, we have the expansion in Asia, and then we have another expansion in London, and then it go into what we call is consolidation, and then expansion and reverse right there. So this the expansion at 8:30, it fell right there. It looked like expansion, then it reversed. And look at the 8:30, and it can give us some clue that it rate the London. Basically, it rate the London high twice right there. Yeah, so we call double rate by side liquidity London high right there. Then you see the 8:30 right there, and we see it break down the low. Then we're going at 9:15 right there, and short them, which is exactly the like on September 24 right there. You see that? It's expansion Asia, you see that, and continue expansion in London. But the difference is that the expansion in September 24 is huge. That's the reason why the reversal right there is huge. So basically, you have expansion, go to retracement, go to consolidation, and then expansion right there. Or you can expansion and then it reverse. Yeah. it's similar like today. Okay, see the 830 expansion, double rate by select squeeze and then reverse right there, reverse. And right here you can see that the 945, it gives us the signal that it will be a retracement and then next leg down expansion. It will not reverse from here because right here you already have reverse. It will not reverse from here. That is the principle we have. The rule number 2 we have for ICT price delivery model. You don't have reverse back to back. So it's reverse right here. It will not reverse right here. That's the whole idea right there. Yeah, here's the framework we have. It's price delivery theory or model from ICT right there. So basically you don't have is reverse and go back to reverse. We have to see where the price come from, and then we can anticipate where it heading to. Right here, you will never have reverse and then go back to reverse, which is back to back right there. So basically, when is reverse right here, it will not reverse from here. It will have a second leg down. That's the idea. And also, if we look on high time frame, we see the lead level 58.50. It will retest this level exactly because yesterday it retested that level and it pulled back right there. Then today it will revisit them. That's what we have on. We have analysis on the daily time frame right here. You see that daily time frame? We see that yesterday it tested that level right there. So definitely today it will test that. It did. You see that? That's the end of the day. But beginning of the day, we did check the screenshot right here. That's the beginning of the day. So it's above that level, but the prior day it touched level, so it will retest it level. That gives us an idea that the second leg down have to be happen. The second leg down for today. Where's our where our today Josh? Yeah, the second leg down have to be happen right here. So right here it have to happen. But anyway, if we mark this candle at 9:45, you see the magic right there. So it's consolidate around that level for the fallen 1, 2, 3, 4, 5, 6 candle before it will break out, make a second leg down. Right here it make a flip right here also make a flip, and the real flip is come from here. And we did get some, we get run over right here because we thought it flipped, so the right here is gonna be done. We thought that it's gonna be reversal from here, even though we know it's gonna be a second leg down. But the formal, we cannot hold ourselves back when we see the flip. But like we say that we have to differentiate between the false flip or fall flag and the real flip right there. In order to do that, we have to understand the direction, how the price is going to deliver. So it will make a second leg down. Not only that, but we base on this this candle, it gives us an idea that it will be a second leg down. Yeah, it will be a second leg down, and the second leg down 11 11:15 right there. It happened at 11:15. We see a similar scenario right here on October 17, right? You see the huge down move right there at 9:30, and you see the candle at 9:45 right there. You see different right there. It make a second leg down, but it make very late at the 14 hour. Then there will be no reversal from here. But for today, it make the second leg down early at 9, gives us at 11:15. Then as soon as it hit this level, it reversed. That is another time-based liquidity that right there. And you can see the magic right here at the 9:45, right? 9:45. Right here you see the 9:45. It well inside the range of the 9:40. So that telling us that the second leg down gonna happen. And right here we can see the setup, right? Test from above, break and reverse a type 2 right there. And we can see if in the real time it's flipped right there. Always pay attention to the doji candle right after a big, down close candle. It gives us a lot of clue where it heading to. So here's another scenario where we see that the expansion, you can see that the expansion a little bit different, even though right here we see that the London is expansion, but before the markets, it's already make a down move, right? That means you have retracement and it turned into a reversal. Because it's a reversal, it will not be reversed right here at 9:30. If you see that at 9:15, already give a signal it's gonna come down. So we can short right here because it's not gonna reverse from here. It needs to down and rate the liquidity right there. So the scenario is a little bit different than today, but the same area that we can engage short right at 9:30. Like today, we can short at 9:30 right there, short at 9:30, and gives us 9:15 and 9:30 right here. We can short them, or we can short at 9:15 if we can engage earlier. We have to understand the liquidity, draw on liquidity. That will help us a lot to formulate our trade idea and where we need to get out. Where we need to get out. You see that as soon as it hit the high time frame level, right, it pulled back right away. But you see the signal right there. It's a hammer candle right there. Boom, and then boom. It breaks that, and then boom, it reverses. That was in the real time right here. How does happen? So okay, so right there, yes. So right here, we thought that it's gonna be reversed from here. You see that? All right, test from below and reverse. Even though we are anticipate that gonna second leg down, but with this move, we change our mind, and that's exactly we're talking about. We have to distinguish or differentiate between the four signals. This is the noise right there. This is the trap. It's not a real signal to go long. It's a trap. The minute we go long, we get run over, we got top up. We did go long right there. We will go to the trade and you can see that. Let's fast forward. You see, the minutes we go long, okay, let's finish the candle. Okay. Okay. So 44, one more minute. You see that? It's flushed down right away. Very fast. That gives us some idea right there. Boom, it rate this. You see that? It rate the buy side of this candle right away. Yeah, we did mark the high rank. We thought they're gonna break that, this candle. So just watch that. Whenever you see it fell, break this, the high of the candle, then get ready and short. It will be a second leg down. But if it break this level and then it pull back below that level, then get ready for a reverse from here. That's the experience that we observe. Let's see the trade we took right there. Yeah, this is the first trade we took right here. It's beautiful, right? 3R. And let's see what mistake we make on the following trade and what lesson we learn. Okay. Yes, so right here we make a mistakes right here because we see that, okay, it rate a buy side right there, so it's gonna reverse, but that is a formal trade. Even though in the beginning we already have idea that it's gonna be a second leg down, it will not reverse from here because it's just reverse from there. It will not have a back to back, but you know, the formal still very strong, and we have to work our way to what you see that we jump into the big side right there. We have to work our way to manage that formal. So we work every day. You see that? That's a big no. What happened? Okay, so we do go long, right? We do go add the contract in there. And did we take a quick profit right here? Did we just check a quick profit? Yeah, I think we did take a quick profit right here, which is a very smart move. You see that? We should take a quick profit right here because it will not reverse. It looks like it, but it's not. We thought that it's gonna take this buy side, so we wait for this hit this high, we sell them. But as soon we saw it failed to do that, you see that? We reduce the side right away. We take early profit. We should take it one
order
hit
filled.
There. You see that? That's good. That's good. That's perfect. Execution. Just leave one contract run right there. And then boom, it come back and good. I mean, that's take quick profit right there. That's good. That's a good trade. Let's see. Okay, so we short right here. All right, we anticipate because it flipped right there, so we short right here. Perfect, fine, right? You're gonna make a second leg down. Let's see how this play out. Oh, okay, but as soon as flip, we get out and we go long. That is a mistake. Because there's nothing right here to go long. It's just a formal right there. actually we fall into the trap because this flip is not real. That's the reason why we always be careful. This flip is not meant to go long, but short right there, right? And after go long, you see that we make mistake. We go long, and now we pay for that, and then we jump to short. But when we jump to short, we put the stop loss too tight, and also we go big right away. That's a huge mistake right there. We should only go one contract and put stop loss all the way here. Right? If we put the stop loss all the way to this candle, we will stay safe, and we can have a huge run right there. So we make that mistake, and now it's weak back, so we go long. That is another formal trade, and then boom. I mean, it goes our way. We should take a profit right here, but we thought that okay, it's gonna reverse from here. I mean, it looked like reversal, right? That's the reason why it's very critical to see to understand between the noise and the signal. So this one is a noise, a fall flag, a fall flip. It's not a real signal to go long at all. And we didn't take the early profit. We should. You know why? Because we only look at that number. That's the mistake. We need to take our eye off this number, because this is a from previous trade, and the previous trade have no impact on this trade. That's the reason why we need to practice very hard to detach ourselves from previous trade. Just stay in the current trade and see that we have to aim for the high of this candle. That's it. Above that, get out. Because this is not going to be reversed from here. It's going to be the second leg down. So that's two things we have to do. Aim for the low hanging fruit right here, and detach ourselves from this number. The reason why we stay in the trade long, don't take quick profits, because we want to, we want like a revenge trade, right? We're going to get back the loss we had, but we have to ignore this right there. So I mean the top step, they design this. Some people accuse that they design, is a bad design to make us fail because we put our eye on the number. We no longer, and when you put your eye on the loss and profits, the emotional taking over, and we no longer make a good decision, because whenever the emotion evolve, our mind get so-called fight or flight reaction, and that's where all the error come from. Somehow we have to reset our mind and detach ourselves from this number, so we just focus on the execution. If a good execution, we should get out from here, take the profits, or a low, just only keep one contract. Yeah, we didn't. You see that? And it come back, and you see that we take a loss. Can you believe that? Yes, we took the loss right there, and then now we go short them. And perfect, guy, the market flip as well. But here's another trick. So 1151, also that means 1145 candle. So 1145 right there. All right, if we want, then keep right there. Keep the trade right there. Stop loss above there. Then we have a huge run right there. You see that? But we get the emotional take. Yeah, you see that? We get out of trade. How did we get out of trade? That is a mistake. That's the lesson learned for. Let it run. It will make a second leg down. But we're scary here. We see as soon as it hit this low, we thought that it's gonna retrace. Yeah, you see that? Oh, we know why. You know why? Let's see how we handle here. All right, so we want to be take early profits because to keep in mind we just get ourselves run over right here because we didn't take quick profits. Now we let that trade, impact us. That means we're gonna take quick profit now. So yes, very hard for us right there. We could not blame ourselves. But we have to, that's the reason why it's so critical to understand the bias. Otherwise, we don't know which direction. It's like chaos right there. So we don't know which one we need to take quick profits, which one we need to let it run, right? So for this case, we need to take quick profits, but for this case, we need to get the winner run. Why we need to take quick profit? Because this one is just a retracement before it make a second leg down. And how do we know that? Then we have to go back to this model right there. So basically you have go back to the chart right there. So basically you have the huge reversal right here. The first leg down, right? First leg down. Whenever we see the first leg down from 9:15 to 9:30 like that, and the huge gap, then the second leg down gonna be for sure. It's not gonna reverse from here. It's gonna be second leg down. That's the reason why when you go long this gate in this candle, you have to take quick profit and out. And then we go short, then you have to stay in the trade. Yes, stay into it. Let the winner run. So that's the huge lesson we learn. And that, yeah, in this case we take quick profit. Instead, let the profit run, we take
order
quick
filled.
Profit. You see that? That's the huge lesson. But let's see what okay. So what we do right here is crazy. We go long right here. You know why? Because we thought that, wow, right here it couldn't break this guy, so it's gonna reverse from here. That is a gamble right there. Because if you want to play reversal, you have to wait for the setup, right? What the setup for reversal? You have to be type 1 or type 2 reversal. You don't gamble like that. And also keep in mind that the next leg down gonna be forming. So, and you know what? We gamble the huge side. That's the huge no right there. Yeah, here if we want to do reversal, make sure that it have these two setup, type 1 and type 2 right there. Type 1 is break, test from above, test from below, and reverse. In this case, we want to go long, right? The type 2 is test from above, break, and reverse. It's not there yet, but we try to go long and go big. That's a gamble. We should stay away from this kind of trade. That's the one we need to tell ourselves, stop doing that. It's okay to make mistake, but don't make the same mistake again and again. Yeah, we go along and look at that. Boom. We get run over, and then we switch to short. Look at that. And then boom, we blow up our account. We max out right there. So that's that. The huge cash, the huge lesson learned. Okay, so now we come back here. We do a long trade right here. You see that we do a long trade again. After we see that, right, we do a long trade. That's the mistake right there, because you see the flip. It looked like long, right? We jumping and we don't know that that is the flip gonna go to short. Boom, and we try to short them. Let's see what in the next video we have. All right, so we short them, we jump to short them, and let's see. Yeah, Interesting, huh? Okay, so perfect. We am at 30. You know why we am at 30? Because look at the charts. That is the high time frame level, weekly level, right? 58.30 right there. So perfectly, we have a you know, uh, half of one above. So make sure it hit it. And let's see, beautiful. I think it hit it. Yes, that's the beautiful trade right there. So basically, when we see the flip, we jump in and short. That's a good trade because it's supposed to be long, but the flip. So the real flip is come at 11:30. No, 11:15. That's the real flip right here. 11:15 is a real flip. I think we did take a screenshot of that. 11:15 is a real flip. We need to put in there in our journal. Yeah, the real flip right there. Oh, okay, 10:45. Second leg down, 10:45. Yeah, 10:45, but it pulled back one more time, and 11:15. This the real flip right there. But anyway, we take a very good trade right there. Boom. Good. And I think let's view one more trade. Here's one of the last trade we take. Look at that. What do we see? We see it test from above 1, 2, 3. It will break, right? That is the idea, right? If you jump in here, short them a little bit late. You have to short them from here and get out when it touches level because it can flip. Look, it flip in this case. You see that? It flip. It's totally trade back. And look, as soon as we saw that, we know that the algo is set to reverse from here. Because you have to reverse from here, it will be a second leg up from here. It will not reverse from there. So that's we're always critical to go back to here. Remember, it will never reverse back to, go back to reversal, back-to-back reversal. So basically, right here, you just have reversal right here. And then when you see the leg down right here, down low, it will not move down because it will not reverse from there. Because there's no liquidity from here. It already take all the liquidity from here. So there's no buy side liquidity from here. So it will not going down. That's the reason why you see this candle got flipped. You see that? Test from above 1, 2, mark this low right there, 1, 2. This one's supposed to be break it down. It did. It looked like it did, and then it flipped. So we know that the second leg, like another expansion move gonna be happen, and the target gonna be this high. Exactly, it happened. Or the low than that is gonna be this level right there. Or the high of this candle is the best. No, the Dow close right there. So you see that as soon as we saw this gonna be flipped and it's gonna be another expansion. Basically, you have reverse, retracement, and then expansion. It will not reverse from here. Yes, so we're going right there. We go very big right away. And at first, we just aim at the high of that candle, which is perfect. Yeah, and then later on, we say, okay, let's move to this high, and this candle get a little bit nervous right here. Get a little bit nervous, but we stay committed into the trade, and you see that it did hit this level, the breakout level right there, but it's and the next candle we still trade, and then boom, you see that it did hit the high of this candle, but it failed to hit that level. So we take I think we take if we let it the high candle, we already out of trade. All the high candle, this it should hit our profits. But we leave our target a little bit too much right there. That's the reason why it did not hit. So we just take the whole thing off. You see that? So we say forgot about it. Forget that, get off. You see that if we move that to this target, it already hit that target. That's the low of the candle right there. But we aim a little bit too high. I mean, just a little bit too high. So we close. I think we close the trade. We should close when it's 4,000. But we're a little bit late. We're a little bit hesitant. So we close. Yeah, when it doesn't look good, so we
Order filled.
4,100 something. All right, I think that's it for today. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming our way. Day by day, little by little, getting better and better. Have a great evening, and see you tomorrow. Bye for now.